Good morning. This is Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comments for Tuesday, the 11th, 11/11/25. For you, uh, looking ahead, what are you looking at here? Well, red overnight. We'll see. I think people are starting to realize that Friday we're going to have a USDA report. It's the first information we've had in a while. Could be pretty interesting as far as price discovery goes. Um, Overnight, these corn down a penny, 4.28, with penny and a half, 2.5 cent range. Penny and a half cent range, 30 to 28 and a half. Jam beans, 8 cent range overnight, finished down 6.5. Same idea. I mean, we ran up there against those 15, 16 month highs. Um, the bull needs to be fed every day. So we've just rallied over $1.20 in the last month. If that's not something worth protecting for you, I'd like to know what is. March and D Sweet both down 2.5 overnight. Just kind of a quiet night, really, but not surprising to see a little bit of profit taking. Are we going to get a turnaround Tuesday? I don't know, but there's a reason that happens. We had a big up day in the soybeans yesterday, right up against resistance. Soybeans have been in about a 30-cent trading range, so bull or bear. If you've been patting yourself on the back on the days that you were right, I think that's a mistake. I think you need to have a bigger, longer term outlook rather than what's going on here when we're whipping around at a 30-cent range. I think the bigger idea is that we picked up $1.20. What are you going to do about that? We're going to see today, is cattle going to remain limit bid? That's been very, very volatile. It's pretty technical. A pretty big turnaround in all the entire protein complex. I don't know how much of that was because now it can be as stupid as the fact that people are like, okay, SNAP benefits are coming back. The first thing people are going to do is going to go grocery shopping, right? I mean, I've heard more absurd things in my life than that. At the end of the day, the cash market is what it is. You did have some headline stuff coming across there. No news on opening the border. No news on any more imports. No news on Brazilian um, tariffs. So this just feels more technical for me. You've got to remember, we rallied 10 months to a year, and then in about 15 days gave back anywhere from half of it, anywhere from 40% of it to half of it. And to step in now and say, okay, the coast is clear, time to get long, we're going back to new highs. That's someone with um, a bigger ego and deeper pockets than me. I would say keep your upside open. That may have just been the first shot across the bow. Everybody's going to look and see, our feeder cattle going to go fill that gap. There's a gap up there. I'll tell you right now, if you look at January, that gap is pretty far away. We settled yesterday at 328.80. The gap comes in at 340. So are we going to get another $12 limit move bid to get up into that gap? The gap gets filled at 340. So again, is there enough gas in the tank for a short cover rally that gets us back up to 340? I don't know. 348. Actually, that's the low. 348.175. So we're at 28. So is there $20 left to go in feeder cattle? If you're feeling extremely bullish, you know that should probably be your upside target. Got to remember, just 3 days ago we were down at 311. So that would be my bigger concern there is what happens if we take out 310? What happens if we go back down to, where we were last March, 266, something like that. So a nice turnaround in the hogs as well. Hogs are giving back pretty much exactly almost a perfect retracement. If you look at the D slow contract low, which was in April, just under 67. We hit 91.50. 79.21 was pretty much dead on halfway back, and we turned around with a spike higher. So there's no gaps or anything on the chart that I would look at to really talk about these hogs. Just more of a classic textbook 50% retracement of the rally. What rally? The rally that started in April when we first had the tariffs back in April. We slammed lower, and then we peaked out in September at 91. What was the high? 91.45, 91.50, that area there. So we had a $25 rally, and then again, same old story. It took a matter of weeks to give back half of that $25. So keep your hedges in place. If you want to talk about specific levels, if you want help with your risk management, give me a call. At the end of the day, you need to keep your head on the swivel. You need to keep your opinions close to your chest, because opinions um, do not pay the bills. What pays the bills for farmers and producers is good cash sales, and also capturing chunks of good revenue when it shows up. This is Chris. Have a good day. Give me a call, 312 638 8868.